Hi, my name is Richard Lee and I run the Stockradar website. I'm here today to try and help guide you through the stock market, how you can be a successful trader and what you need to do to get there. Firstly, I just want to talk a little bit about a debate that's currently raging, the passive management versus active management debate. Put simply, in the passive realm, they are low cost. They cannot outperform the market because they're index matches, and of course as their index matches they go down as well as up. So they're low cost for a reason, and they will never outperform, and your capital is never safe. So that's the passive side of it. Now we go to the active side of management. In the active management world, there are 70% of active managers that underperform the index. That leaves only 25% of managers that outperform. Okay, and of those 25 managers that outperform, only 10% of those will outperform for 3 years or more. So we are looking at a very small pocket of fund managers that can help you outperform the market and protect your capital. So what I'm doing here today is I'm trying to show you a way that you can do it yourself, not pay fees and be successful. Okay, so let's just take you to the website. Stockradar, the technical advantage. Because the only stock market advice you can trust is the price action. The price never lies. It's what we trade, it's what we profit from. There's only one price for a stock. Actively traded models that deliver absolute returns with capital protection. That's what I run and operate on my website. So I'm trying to show you roughly how you can do this. So this is where I start. So how I make profits and keep them, you can see from the graph there that through the last 17 years, the equity curve on my balanced conservative portfolio has gone up steadily over the years, with very small contractions during 2007-2008 crash as we rotated properly from equities into cash. Okay, so let's talk a little bit more about how I do it. Okay, firstly, what is Stockradar? It is a systematic trading strategy. Capital preservation is the driving force behind our risk management strategy. Your capital is safe. Thirdly, we deliver absolute returns over the last 13 years of published results. And this is what we want to see, a steady increase in your equity while your capital is protected. How do I do this? The key themes of Stockradar Trade Plan are all applied in real-time environment using live trades. So the website is updated every week. I'm a weekly model. I lead by example. I give entries and exits of my trades, and I give set stop losses. So you get the whole process of what I do and how I do it, or when I do it, and why I do it. Okay, firstly some background. Who is Richard Lee? I began trading futures and options for leading financial institutions, including the Australian Bullion Company and the equities division of National Australia Bank. I then pioneered the use of technical analysis at Dow Jones in London between 1991 and 1996 as a tool to help market their products. So I've worked on the broking buy side, and I've also worked on the vendor sell side, so I have a very good idea of how these two sections interact. It is my passion and objective to make it easy for people to make the right decisions in the stock market and generate consistent returns independent of the fortunes of the market. You will notice on my site there are no affiliations, there is no advertising. My revenue and my interest is basically governed by helping you. Okay, and that is my interest and that is my passion. Okay, so my business Stockradar was founded in 1997 to provide an independent alternative to fundamental analysis. Hello, it's only my birthday, 2017. So that's not bad for 20 years. Okay, now big question. Why do people so often fail to make money in the stock market? We all have stories of friends who've gone into the stock market and they've left the stock market because they've lost their money. Well, a lot of people go in very ill prepared. Okay, now one of the main reasons that people fail is from ill-founded biases that we have built into our own selves. Trading is a learning journey. It doesn't just happen. It's like any business. We need to understand, grow, learn, develop, and make things better and better. We all have natural biases that we need to be aware of, and we must address them before we can build a successful trading career. This is referring to the stock market. When we're talking about dollars, it affects the way we think. In my next tutorial, I will list some destructive trading biases that can affect us all, and as a result, our ability to achieve trading success. This is a part of the learning journey, you take as a stock market investor. Yes, there is a lot that can go wrong, and we're often unaware of them. Let's look at just one of these, the last trade bias, and see its effect. Okay, the last trade bias from a winner's perspective. You've made money on your last trade or your last few trades. What can be the psychological effects on us? It feels good to win. And a first trade winner always excites and motivates us. We're initially enthused and controlled. If we win a second time, we become more optimistic and excited. This is a good game. The third trade might be a loser, but we take that in our stride. We can rationally accept a loss as a fact of trading at this stage. We're still rational, and that's good. The fourth trade is a winner, and our confidence soars. 3 out of 4 ain't bad. This is a good game. The fifth is a winner. Overconfidence is an emotion that then afflicts us. It's an easy game. The sixth trade is a winner. Greed rears its head. I double up, and it's a loss. No matter, I'll go again, and double up again, and recoup what I just lost. Here the emotional and irrational spiral begins. Losses naturally follow. We more often than not lose control and our money. The destructive path can quickly decimate your capital. Many of us have already felt these effects. Where to now? Confidence is lost. Time to give up and go back to the old job? The good news is it doesn't have to be that way. Okay, it just requires a bit of understanding, a bit of learning, and you'll do fine. Okay, so let's take the last trade bias from the loser's perspective. You've lost money in your last trade or your last few trades. What can be the psychological effects of this? The first trade loss is not serious, but dents our thoughts of all trades are winners. We have to get used to that at some stage. The second trade loss saps our mental strength. We tweak the trading plan or change what we trade. The third loss in a row gets more serious and we get angry and we lay blame somewhere else. Then we might have a win. Phew, everything is all right, just been bad luck, we're back on track. The fourth trade is a loss. Motivation is sapped, doubt creeps in and we double up. Another loss, and you probably know now the emotional spiral begins. The last trade bias, if we let emotions control us, can have a debilitating effect whether we are a winner or a loser. The path of destruction is a common one unless we address the bias and control the problem with our trading. So as a winner, we can become reckless, and as a loser, we can become fearful and paralysed and go off and do another job. So we're trying to avoid that. We're trying to manage the situation. So what can we do? We can take control. In most instances that I find, the market controls the trader. The trader responds. In my situation, I want to control the market. So I want to know exactly what I'm doing. When the market does something, I know how to respond. So I'm taking control, and I'm not letting the market control me. And this is very important. Emotions and biases, without control, have a detrimental effect on our trading. We must address biases, negate emotions, and trade in the same controlled way, no matter what the outside influences are. How? Develop a systematic trading plan. Assert your discipline and control over your trade plan, and follow rules that protect capital and drive profits. Don't deviate from it. Okay, the next slide is a great leap forward. Now, why have I put this up there? We all can develop trade plans, we can develop rules and processes to trade successfully, but can we do it? Often there's a little man in our ear saying, well, do you think you should take this trade? Or maybe we should double up on this trade. All these things will take you outside of your trade plan and outside of control. So knowing what to do and actually doing it is the hardest and biggest step you must now take. And this is what I find when I speak to most traders. They actually know what to do, but actually getting to actually do it properly is hard, and that's a discipline. I'm going to give you an example of a simple premise of my trade plan is based on. For any trade plan, there are 4 possible outcomes. Big win, a small loss, and a big loss. By simply cutting out number 4, big losses, through clever risk management, we're already well ahead in our quest for success. Does this make sense? It should, because it's important. If we can cut out that number 4, that big loss, then we're well ahead of the game. So this is just one of the basic premises that I use. Okay, so this should give you an insight into my common sense approach of my trading rules. In my next video, I will show you my top 5 tips for success on the stock market. Now that you've come this far, I encourage you to take a free trial of Stockradar and see how the results are generated in real time. Okay, I look forward to seeing you in the next video.